Hi there, welcome to Grain TV. I'm Kevin McNew. It's Tuesday, January 17th, and an up day in the markets. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, beans continuing to advance, gaining through 23 cents up to 10.69 on front month March. Corn and wheat also stronger, gaining 7 respectively. March corn at 365.5 and March wheat around 433 on the close. Really today we came back from the long 3-day weekend with news that Argentina saw very, very heavy rains, 3 to 5 inches in some places, that on the areas that were already soggy, and that got the market gapping higher on the open Sunday, or on the open Monday night, around that 10:52 mark, and that really was what the catalyst was for today. There's also a Brazilian trucker strike going on. That's not unusual this time of year. They always seem to be sort of in upheaval, complaining about wages and such, and so that's going on as well as their soybean harvest in the early part of the season starts to get going. Other news out today, there was some export sales announcements by USDA, this time 103,000 metric tons to unknown for corn. That's on top of 135 announced on Friday. So yet again, some more positive business, but no soybean sales. And in fact, there's some lingering problems in the export arena for corn, because ethanol China has announced that they are going to be canceling some of their ethanol purchases from U.S. suppliers. As much as 6 to 7 cargoes are expected to be canceled because of the increased tariff that will go into effect in March. Basically, the tariff or tax on ethanol imports into China will go from 50% up to 30%, which effectively will stop any sort of flows of ethanol into China in the near term. So that is certainly negative. But today really was about looking at the soggy South American conditions in Argentina. Now, the upside is that when we look ahead for the next 10 days, these soggy areas will likely start to dry out. The weather forecasts show very limited rain potential and only rains returning at the end of the month. So a good 10 days, if you will, of very, very sort of favorable growing conditions in these soggy areas of Argentina that have been hit hard by excessive moisture. In addition, northeast part of Brazil, which has been drying out, has seen some good rains as of late, and rains are expected to continue. So I'm not sure this rally that we've seen persist over the last 3 days is going to be able to hold in light of sort of some lingering good news in terms of weather. The other thing that's a negative on the soybean market was the NOPA crush numbers that came out today. The trade didn't seem too interested in trading this number, but I think they were certainly surprising in light of what analyst expectations are. As we look at NOPA crush estimates going into the report, we saw 162.8 million bushels is what we expected the soybean crush to be for December. Instead, it came in at 160.2, and also problematic was higher than expected bean oil stocks coming in at 1.434 billion pounds versus 1.352. So overall, that was certainly a negative number for soybeans and for soybean oil. Soybean oil did actually close lower on the day, fractionally so. But I think in light of this big rally, going from 10.10 before the crop report last week up to 10.75 on the high today, backing off around 10.70 on the close, I think the market may be due for a little bit of sell-off. Other news out today: export inspections came out. These numbers were at the low end of expectations for corn and wheat. Corn coming in at 888,000 metric tons versus 800 to 1 million metric expected. Wheat also coming in down on the low side, 344 versus 300 to 500. And beans, a respectable but not out of the park number at 1.4 million metric tons. So overall, our export program is pretty much as we've expected. Nothing really shocking here to change the outlook, for the export situation. Let's take a look at March beans and where we're at in the chart in reflection to where we've been. And actually today was a pretty pivotal day, I think, because we traded up to that 1075 mark, not once, not twice, but 3 separate occasions in today's session. We started the morning session getting up there quickly to 1075, backing down, coming back again at it, and then finally a third time hitting it about an hour and a half before the trade close. And what we saw was a pretty quick sell-off down into that 1068, 1070 range on the close. So yes, it was a strong day. It was a 20-cent move on the day, but overall we didn't hold the gains that we had, and we made three attempts at taking out 1075 before failing back. The other thing, keep in mind, November beans did not really keep the rally in place here. We traded as high as 1030 in the overnight session on November beans, but closed down around 1020, closing up only about 2 cents on the day on November beans. So November beans, which a lot of farmers I think are looking at for their new crop decision making, didn't follow through in conjunction with old crops. So keep that in mind, that there was quite a bit of action in sort of this bull spread of old crop versus new crop going on today. That's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you in your own grain marketing situation, visit us online at grainhedge.com.